Hello, everyone. Welcome to our trading Mondays for the trading week and the Tesla outlook for this week. It's going to be a very interesting little session here. We don't make it too long, but I want to give you, as promised last week, every week on Monday, a preview of what I think about the week and how a Uber bull, me, based on fundamental analysis, not wishful thinking, takes advantage of insights into trading. So the idea here is if you have conviction that Tesla goes to 10,000 by 2030, which is my conviction based on my research, what can we do about it? And of course, going 100% long on Tesla is one thing of handling this, but I'm not happy with 100%. I want to be a little leveraged. I want to take advantage of that. And leverage is something very difficult because you have to trade if you want to be leveraged. Someone in the comments last week said, Joe, why don't you just buy this ETF, right? The 2x Tesla Bull ETF. And I can show you what they meant with that. There is this thing here that's called the Tesla ETF. And I have here a nice little chart for you where we see how this thing performed, the Direxion Daily Tesla Bull 2X shares. Now, the interesting thing about this is, they're saying the target here is to be 2x long Tesla. But when you look at the year-to-date performance, they're at 84%. Well, first of all, that's not 2x, right? Because when you go to actual Tesla, we can take a look at Tesla, you see that the year-to-date performance is actually 55%. So 85% is not 2x of 55%. 110% would be 2x. My portfolio is up 120%. So I'm much closer to a target to achieving 2x leverage. Now, why is that important to understand? It's important because when you do these things, going leveraged 2x Tesla is not that easy, right? Because if you just leverage your Tesla position, you have 100% Tesla and you leverage it with 2x or 1x leverage, right? So you're basically at 200%. If the stock drops, you're getting margin called and you don't have the capital to stay 2x leveraged. That's why 2x leverage sounds good for ETF, but I always wondered how these guys do it. And when you actually look into it, they do not have 2x leverage effectively because it's too hard to do. So that's why we are going into the strategies here. How can you actually achieve that leverage? And by the way, this is not investment advice. Obviously, this is just sharing my strategies and ideas to take you on the journey and see how I'm doing this. So what happened last week? So we were talking about this channel, right? 325 to 360. And that was my strategy, to stay in the channel. My prediction was we are probably staying in that channel. And I was positioned to stay in the channel. But I knew there are all these new catalysts coming up, right? Wall Street analysts doing their new calls based on version 13. So I was prepared for some potential upside risk, right? And it was very good that I was prepared. So on Thursday, we had this breakout and I closed all my short calls positions that offset my leverage at 366. So I took, action on Thursday. I was like mentally prepared. Okay, something can happen here. And I came out pretty strong last week. Very good alpha over Tesla. And this morning, of course, we need to ask a very important question. What we have seen, what was going on here? Why did we have this breakout? We had the breakout because we had a bunch of soft catalysts raining in on Tesla. And that happened on Thursday. So we have multiple price target hikes right here from Roth, from neutral to buy. We had Bank of America raise the price target. So we had multiple analysts doing that. And of course, funny thing is Craig Irvin, the bear at Roth, increased his price target from $85 to $380, which tells you everything about analysts, right? I mean, there was no news on Tesla. Literally nothing changed. And this guy was always a super bear and then suddenly said, oops, now it's 380. So these guys are just going with the flow and trying to, follow the stock, which makes no sense for predictions. So long story short, what happened last week was that a bunch of kind of soft catalysts came in and drove up the price. The two big, soft catalysts that came in is version 13 got very good reviews, full self-driving version 13, very good reviews. I always pointed out, I don't buy this as any kind of hard catalyst. We all knew it's coming. We all knew it's going to be great. We all knew it's going to be 5x. We all knew it's insufficient to launch Robotaxi, but it's a confirmation we are on the right trajectory. So that's what I call a soft catalyst. It does not unlock a revenue stream. It does not prove the business model. It does not prove Tesla can do it. It's just an incremental step that all the bulls, including me, expect to happen. So nothing new here. And then the analysts came in and said, oh, whoa, now it's $400 or whatever, their price target, right? And that always drives up the stock short term. Why is that important? Because for us, the central question to predict the stock price in the short term is hard catalyst versus soft catalyst. And why is that so important, the difference? I explain this right now, why this is so important. So if you go to Tesla stock and take a look at this, why is it so important if something is a hard or a soft catalyst? Because if something is a hard catalyst, Tesla stock reacts very, very differently. And what Tesla does with catalysts is look at long term here, 5 years. That's what Tesla stock is doing. It goes from 140 all the way to 293, or it goes from 208 all the way to 407. Or, by the way, here in the very beginning, I remember this in 2019, it goes from $16. Here's, unfortunately, the chart is cut off, from $16 to straight to 60. So that's a huge, over 3x increase in a couple of months. This happens if Tesla hits a hard catalyst. And we need to be very prepared mentally for that, because all the things that I'm discussing here in weekly tactical trading with, there's a channel, there's a ceiling, and there's a floor, goes out of the window once we hit a hard catalyst. So for me, the central question was, are we entering into a territory where you're dealing with some form of hard catalyst here? Because it would mean it's not blowing just through 60, it's going to blow through 400, through 450, through 500, right? And you have to be very cautious about these things, because my entire current tactical trading strategy is designed for quick soft catalyst leaps and then consolidation in a channel. So I can show you what that means exactly, right? So if my thesis currently, my soft thesis is, you see something like November 14th, right? 311. Let's see here. Here's these short kind of soft pushes. Here's earnings and here's election. So in these things, you need to drop everything I'm saying, change your position, say we have a new channel. So it goes up here and then it stays in this channel, or it stays in this channel. So you are basically having these phases of consolidation and sideways movement, and that's beautiful for doing short option strategies because it's reining in 100% alpha if you do that, right? You just have to be prepared for these breakouts. Now, the big question is, if you have a breakout like we recently had, like this one here, 332, see, it's consolidating here. That was my whole strategy. Boom, boom, boom. Everything is fine. And then last week on Thursday, it breaks out of this channel. Boom, it goes up. And so the big question now is, does it establish a new channel from 400 to 370, which is what I think, but very different from my election predictions or from my fundamental predictions, where I have very high certainty about my predictions. Diamond hands, long-term Tesla, all in. Short term, you need complete paper hands. Paper hands are the key to winning when you're a trader. You form a hypothesis for this week, At the millisecond this hypothesis is broken, you need to switch your mind and your position. So right now, as we speak, I believe Tesla is probably in a new channel. We see this today where we are. Right. So we had a fake breakout, which was very scary in the morning. I repositioned all kinds of things because I thought this goes now hard up, even though it's a soft catalyst, but who knows what Wall Street thinks. So I thought, maybe they think it's a hard catalyst here. And it went to 406 or something. So I repositioned myself. So, we are breaking out of this new channel. But then guess what? My initial instinct was right. And it bounced very hard off that ceiling. So I think for now, if nothing happens, we are going to be in a new range. And let's check out what I'm going to do about that new range. So if we're in this new range, everything is good. My core hypothesis remains stable, right? That we are actually in a new channel, a little up the old channel. Let's see. Then we can, let me see. Where is my tab? Let me see how I find my tab. Here. Then we can look at the model and see what we do about it. So here is the model. So what I'm going to do is I'm going to create a new upper and lower bound, 400 and 370. That's the thesis here. That automatically determines we should be bullish below 380. We should be a little bearish, tactically, weekly, by the way, bearish above 390. We are currently right in the middle of it, at 385. So we are neutral. And what are we going to do about it? Let's assume, as always, we normalize this account, right? This is not my account. This is a normalized account where we assume you have 1,000 shares core position, $388,000. Or we adjust this to 385 right now. So that's your thing. And what am I going to do? If my theory remains right, this is what I'm roughly putting on, right? This week, weekly puts and calls. I'm saying, well, let's sell a bunch of 385 at $11. Pretty good. So strike price 385 puts. You're selling them at $11. You're making $11,000 if you sell 10. 10 is the right amount here, in my opinion, for that. And then you're selling another one 400 because we want to skew cautiously bullish still, because I don't trust the situation. Tesla is an incredibly bullish situation. So I skew bullish with this strategy. So we are going 2,000 shares on top of our 1,000. So it's a 2x leverage for these, puts. And, that would be a very good alpha if that turns out correct, because you're making $30,000, 10% on your portfolio if this goes up just a little bit. And then we are offsetting the risk here with 15 short calls at 395 at $7, which is $10,000 on top of it. So what does it all mean? Well, it's very nice, because now you're roughly, you're net short 5 contracts, so 500. So you're net short basically 0.5x. You leverage 1.5x over your 1,000. You basically net long 1,500 shares instead of your core position of 1,000. Now, let's see what this all means if you simulate it out. These are our outcomes end of the week. Assuming we don't change that position because everything stays stable, the stock does not break out above 400, and it does not break down below 370. So this is what's going to happen here. This is your alpha, your absolute alpha you're generating. Very nice. Your absolute alpha that you're generating here, if these are the outcomes with that position over a 100% Tesla position, is very simple, right? If the stock drops to 370, we are slightly bullish positioned, so this hurts us the most. So we lose 1% alpha, right? So the core position, basically, you're basically underperforming the core position with 1%. So if you would have done nothing else than holding Tesla shares, you would have 1% more. But if this drops a little bit to 380, you are already at 4.2%. It's very nice, right? And at 410, you are at 4.85%. And at 400, that's where you win the most, right? Because of your short calls. They're kicking in at some point and destroying your returns a little bit. So 400 is the highest performance. You are like at 8%. This is pretty good. So, that's how I think about it. So we are positioned here like this. These kinds of strategies always work very nicely in sideways markets and movements. Of course, Tesla right now is in a tricky position because we are super bullish long and midterm. We had this crazy run up. It's not impossible that this drops down to 370, maybe even below. I don't think it's very likely. I also don't think it's likely this just runs through 400. But again, absolutely possible. You have to watch out for it. The most likely outcome here is bouncing at 400 and bouncing at 380 to 370. And as I said, these are the two mindsets you have to combine in one brain. The diamond hands, long-term super bull Tesla versus the paper hands trader and says like, well, I have a hypothesis. This is a 60% chance I'm right here. And it's a 40% chance, 20% chance, or 25% chance I'm wrong on the upside, 15% chance I'm wrong on the downside. And so you have to be very agile. But I think this kind of strategy, my performance so far proves that I'm beating this ETF, that I'm slightly above 2x effective performance. The ETF at, roughly probably 1.5x. So I hope that was helpful. This is always fun to do. This is not investment advice, of course. You have to be extremely cautious and on top of everything. So if you ever want to play around with short options or have another strategy, let me know. I think, and you do your own research and you do your own testing of your own strategies, because this is, it's a tactic, not a strategy. But this is kind of my take on this week. We have to stay very vigilant. If anything changes, number one, if there are new catalysts, negative or positive catalysts that changes the situation. There's no catalyst. We have to see what Wall Street does. But I think most likely we are hovering around where we are right now and going up, bouncing back on at 400. And the probability that we drop below the 370, like why would we do that unless there's some kind of market shock? Very unlikely. I think we have a December rally. So that's kind of the situation. I'm waiting for the upside breakout. I think that's the biggest risk here. But I think when I look at my fellow Tesla bulls, I think everyone gets carried away a little bit with this big vision of 10,000 price target. Other people say 15,000 or 5,000. This is all true, but that does not mean the stock runs up and breaks all these resistance barriers unless we have a real revenue stream unlocked. So I hope that was helpful. This week we have a lot of cool stuff coming up every day. Not trading. Trading is just Monday. Then we go more into strategy, end up with civilization always on Fridays. And hope to see you very soon. Thanks for watching.